Good afternoon. A very warm welcome to all of you. It is my pleasure to welcome you to this webinar organized by the CTA, the Alumni Association of the Master and Diploma in Commodity Trading of the University of Geneva. I'm Alessandro Sanos, the Global Director for Commodities Strategy at Refinitiv, part of the London Stock Exchange Group. The commodity trading sector has witnessed significant change over the past years, and adoption of technology has been incredible, and digitalization further accelerated with the pandemic. However, as with everything that is evolving very fast, at times it can be difficult to discern between what it is an idea and what has transitioned successfully from blueprint to reality. The future is already here, and today we'll be exploring some of these new exciting technologies. But before we start, allow me to quickly present you today's speakers. Heike Truol, the Chief Commercial Officer of Minehub Technologies, the open enterprise-grade platform for digital grade for mining and metal supply chains. Petur, Georgesson, the Chief Executive of Technology Metals Market, the primary market issuing and trading platform for technology metals. And last, but definitely by no means least, Rebecca Krauthamer, the co-founder and Chief Product Officer of QuSecure, the company that developed the most advanced quantum resilient technology against cyber attacks. So without further ado, let me open the discussion with some trends that are impacting commodity trading. And Heike, I would like to start with you. Minehub connects the parties involved in physical commodity transactions, and you have successfully solved specific use cases in mining and metals. Could you share with us some of the learnings, maybe what has worked well and what has not worked that well?
Okay, fantastic. Thank you, Alessandro, and good afternoon, everyone. So maybe just to start with a word on what Minehub actually does. So Minehub is an integrated enterprise blockchain-based platform that connects all the parties to a commodity transaction. So producers, consumers, financiers, traders, through a digital platform where buyers and seller can upload, exchange, view documents, and by doing that, basically have one version of the truth. So everyone's on the same page. And the underlying blockchain technology ensures the integrity of the information and makes changes to individual information like certificate of analysis or change in disport or payment details, so in a transparent way. And in that way, actually frees up data that normally in a commodity transaction is in courier bags, in email attachments, in chat messages, in people's heads, but just makes it more efficient, transparency, and also a lot more secure. And so Minehub's been developed with the industry, for the industry, and reflects, and the use cases reflect really work with the largest and smallest players. And you've asked about learnings and what have we solved, and all of what I'm citing has been in the press as well. We've worked with large mining companies like BHP Vale and did transactions to run shipments digitally on the Minehub platforms with steel mills in China. We've also got a digital assay exchange solution, which typically would have been done with a timing delay. So two parties can submit their lab assays, propose and agree splits, finalize the assay calculation, and doing that in real time. And then we've also had use cases on the trade finance side, where basically lenders and borrowers of commodity transactions use the platform to finance a number of shipments. So what's worked well? New propositions, such as Minehub, that look to change or bring change to the industry, need co-creation and direct user feedback. So we rely on companies within the mining and metal space to provide that feedback, work with us and co-create and shape the product. And that's really what's worked well, where we have gone into long-term relationships with bigger industry players to help shape the product. And what's harder, I always say in driving change, the technology often is the easy part. Technology can always be created for a use case. But fundamentally providing a solution to bring change, it's the network effect, it's bringing the ecosystem on board and collaborating to create partnerships, and then also recognizing there's many solutions out there and actually partnering up where it is possible rather than trying to do it ourselves.
So collaboration is key, basically.
Absolutely.
Petur, the industry is digitalizing. Technology metals market enables investors to trade high-value metals, which are critical for the global high-tech industry. How does a fintech create value for the market?
Well, hi, good afternoon, everyone, and good morning, good evening. I guess we're talking to people around the world. The value add comes from where it all started, which was when this business was being conceptualized. There was over close to $1 trillion of technology metals, which were circulating around the world with absolutely no centralized liquidity. What that meant is that there was you effectively had a blind grid. You couldn't understand inside any vertical what the pricing was. You couldn't understand specific volumes. Nothing was done on a real-time basis. So what we developed the business to create was a form of an exchange market where technology metals would be traded in a very transparent, empowered, democratic way, where everyone could see price and availability, understand how deep books were, how deep supply and demand was on these critical materials. The overwhelming theme that guided us forward was the fact that the demand is absolutely insatiable. The problem is the supply is vastly less. So in building a market which was relying obviously on new age technology, it was a quick ability to be able to build such a marketplace, which brought total liquidity to the market. I think also most importantly, what it did was it gave everyone a level playing field. And what we'll be seeing, so rather than, as Heike mentioned, it's not just the technology, it's actually what the technology enables. And it enables empowerment, it enables democratization of markets. So any country today that's historically been looked at as a second-tier provider has a chance now to enter directly into the first world market, meaning the centralized market. Everyone is now the same. We're talking about an enabled and empowered playing field, which technology brings. And with it, everything becomes visible. What we did when we created this business was not to try to recreate a better way to move product from A to B. Rather, it was to create a fully fundamental investment market. So now when investors want to take exposures to an EV sector or an aerospace sector or defense, any of the things that we hear about all the time, rather than the ability to go into micro investments such as specific equities on the market, you're able to take macro views. And this is another enablement of what bringing metals into a tradable ecosystem has done. So, we can go on and we'll continue more as we go, but these are some very big themes that the technology enables.
Excellent. Thank you, Petur. Rebecca, QuSecure provides next-generation cybersecurity to protect IT networks from quantum and classical threats. Could you please quickly explain quantum computing and how it relates to the future of commodity markets?
Absolutely, yeah, sure. So everyone is probably to some degree aware of the cybersecurity threat now and how that looks. And what we focus on is that, as well as the incoming threats. And one of the main threats is from quantum computing hacks. And maybe quantum computing's come onto your radar somehow, and you've heard the little spiel about it having qubits, which are kind of the analog to the classical computer bits, and they can be 1 or 0 at the same time. But that's kind of a dissatisfying explanation. So I have a little visualization that I like to explain it with. And so quantum computers, the next generation computers that are coming online will sort of be here in the next several years. So to visualize, imagine that you're trying to solve a maze and you're a person and you enter into the maze and you hit your first T, right? And you can go right or left. So you pick one, you go right. You hit your next T, and you have to pick one direction, you go left. And then it's this iterative process through the maze. Now, a classical computer works exactly the same way. But if you take a quantum computer and the quantum computer enters into this maze and you hit your first T, the quantum computer can go right and left at the same time. And it's not just in parallel, but it's actually as though it can look at these different possibilities simultaneously. And again, both at the same time. So it can look at all these different paths through the given maze at once. And through sort of quantum cleverness, it can prune off the wrong paths and instantaneously find the most optimal path through this maze. So, so you can kind of start to visualize the sort of impact something like this might have. And these are very real devices. We're sort of in like the 1960s, if you relate it to computing development. So, the US has put in billions of dollars, China has put in even more, et cetera, et cetera. And they're very, very exciting devices because it has huge implications for development of novel materials. So you can actually simulate chemical systems and use these to develop new, stronger, however you want to optimize materials. You can use it for AI, you can use it for logistics, right? If you imagine that maze, there are a lot of companies experimenting with quantum computers to look at how to optimize autonomous fleets, which is a very hard problem, right? Traveling salesman sorts of problems. So very, very exciting, very cool stuff that we're going to be able to do. And of course, one of the very serious implications of quantum computers is that we can use something called Shor's algorithm to very simply break public key cryptography, which is the sort of the foundation of cybersecurity and data encryption that we use today. And the basis of that, we use that form of encryption because it's very mathematically hard to solve by regular computers, but with a quantum computer, it's very simple. So implications for blockchain, implications for all internet, implications for essentially all data transmission and connected communication. So that's that's something coming down the pipe and something that we are working to get ahead of.
Excellent, thank you. And in the meantime, if any attendees has any question, please use the chat so that we'll be able to go through them at the end during the Q&A session. Heike, let's dive a little bit deeper. What changes do you see in the market? There is a lot of buzz about that. Can you share some light on what is already here and what is coming next?
Sure, absolutely. It's a broad question. What changes do you see in the market? It's interesting. I mean, we're focusing on digitalization and technology, but interesting listening to Rebecca speak. Cyber is absolutely a threat. And when you say a change, that's just, amplified even further over the last couple of weeks with the tension in Ukraine and now the war. And then there's a broader question about Russia and Ukraine. Will it bring structural change in commodity markets, erosion of demand? Is the impact on the energy transition from brown to green, will it accelerate it or make the transition longer? Are companies vertically integrating? So all big, broad topics, but on the technology side or digitization within the mining and metals supply chain and commodity markets, it's already here. It's here to stay. The pace of change is accelerated. It is accelerating. There's a greater willingness to accept it, find solutions to change the industry, but it will take time. It's still fragmented, and there's lots and lots of solutions. So I think what will come, or what is required, is more push, I guess, also on standardization and digital trade across borders. I think it's companies alone won't be able to solve it. Just looking sort of at electronic bills of lading, it's staggering that in 2020 only 0.1% of global trade used electronic bills of lading in 2020, which is really, really small. And the opportunity is huge. And there's, I think, quite a lot of sort of cross-country initiatives like the Digital Standards Initiative that's looking at creating interoperable ecosystem. Or just this week, I was reading that the UK and Singapore announced the digital economy agreement. So I think a lot of more is required to kind of lay the legal framework or the groundwork for actually companies that are trying to enable digital trade and provide technology solutions to be successful in that. But future view, what could come? Of course, living in the blockchain world, you can imagine application of blockchain, tokenization of cargoes, a creation of a digital twin where attributes like who owns it or what's currently on paper could be digitized and then amended on the fly. So, we're talking to the Commodity Trading Association. So you don't trade full vessels in the future, but, the tokenization will allow to fractionalize it, and then you turn vessels into floating supermarkets. So, you can trade units of iron ore rather than with instant contracting and BL amendments rather than the entire vessel. So that would fundamentally change commodity markets, but we're obviously not there yet.
And it's not that far away. Yeah? From my conversation with different companies, we're not that far away from that.
Absolutely.
Petur, I would like to come back to you. How can supply chains in the mining industry be improved? Which inefficiencies can be removed?
Well, you can't change one thing. What's in the ground is in the ground today, and there's not going to be any more of it. So we have to fundamentally look at the bottom line. And the bottom line is that regardless of what technologies are coming into the world, we have a fundamental lack of supply. So this is where we really face the biggest problems. Now, the upside of all of this is that the resource cradles today are in Africa, are in South America, are in a lot of regions which have been historically middled out of a proper free market. So you have now an ability to create a transparent global market. And with that ability, everybody has the same rights. And when you get to that point, you're able to have a more direct, fluid, empowered market where every country, every resource producer can take a seat at the table on this centralized market. And that really is the biggest, I think, changes coming about. I think what is also key to understand is our transition generally into alternative energies, wind energy, solar energies. What a lot of people don't quite realize, it has an absolutely tremendous pull on the earth anyway. None of these industries are able to function without metals. Almost none of the tech we hold in our hands, the tech we use every day, is able to function without the metals. So really we have a reliance one upon the other. But the most important factor here is going to be centralizing this to an extent that everyone can see what each other is doing. It allows countries that have historically not had a chance to compete directly to do so. So, when I look at the markets, I look at all the countries that have been looked at as players that needed help in terms of getting their product to the market. Now we see the chance that those countries can bring their product directly to the market. So this is a big recurring theme, and I keep mentioning this, but this is really what is changing the markets today.
And with markets sitting with small countries now sitting at the table directly.
Exactly. I mean, you can take any African country, and it's 200 years of history of colonialization and absolute opacity, where they were basically hoodwinked to many extents by selling their product for way too cheap. Now they can come to a direct market. They can sell their product at an official global price, which is created through price discovery, through buyers meeting sellers. And what that really means is absolute full empowerment. So now we're talking about complete democratization, complete transparency, and full empowerment of the individual, empowerment of the country. It's the spirit of the times, right? It's everyone feels they have the same rights as everyone else, same rights as any bank, same rights as any major trading company. Just because you're an African resource producer doesn't mean you shouldn't be selling your product at the same price and with as much directness and transparency as a Western producer. So we're going to see fundamental shifts in geography. We already look at some of the various parts of the world, the Middle East, Africa, South America. These are the tailwinds are strong. Now you bring to that technology and the ability to enter into an open market. there's no stopping then what these countries can do when there's an even playing field. And
geography is not a limit any longer.
Technology brings.
And Heike, I know that you wanted to share your view as well.
No, absolutely. It was interesting. Thank you. Listening to Peter's view around the level playing field around commodity producing countries. And it's interesting if you look at the supply chain. I mean, if you move a container from Africa to, let's say, the Netherlands, takes 34 days. There's 30 companies involved, 100 people, 200 interactions. You can just imagine the emails flowing back and forth. There's just a lot of friction in the supply chain. Data is vulnerable to fraud and manipulation, and it takes time. And in the vein of the responsible sourcing of minerals, it's also increasingly important, to the end user to be responsible and have the transparency, and for producers that's regulatory risk and ESG concerns. And I think automation, digitalization will help solve that and also create more interesting work for the people involved, so they can focus on using the information rather than processing it. And this way, costs can be taken out of the supply chain, find its way back into prices, into producer country returns, shareholder returns, innovation, and ultimately lead to cleaner supply chains.
Thank you, Heike. And Rebecca, everywhere I look at, maybe I'm biased, but I see commodities all over the place. Yeah. The moment I wake up in the morning and have my breakfast to the rest of the day, we're using commodities every single moment of our day. So how might a serious cybersecurity breach could affect the commodities market?
Sure, yeah. Both Heike and Peter are talking about the sort of the increasing need and the increase in information digitalization. So of course, when it comes to cyber attacks, you need a digital landscape to execute a cyber attack. So coming online more and more with this data and digitalization, it means that there is more and more space being opened up to these attacks. And wherever there's an integration point, so Heike, you're talking about the complexity of these supply chains or logistics, and so there's many companies involved. Everywhere there's an integration or data is transferred, that sort of opens up this. It can open up this vulnerability point. I definitely don't want to be too doom and gloom about it, but especially where these are in their early stage. Cybersecurity should definitely be a priority from the get-go, because it can open up these points where an attacker can come in. We've seen a lot of different attacks in the last several years. Even just yesterday, Toyota came out with news that there'd been a ransomware attack on Kojima Industries, which is a plastics and electronics component supplier. And so, that set Toyota back something like 13,000 units, just this one incident. And Colonial Pipeline last year, right? I think everyone was very familiar, and Colonial Pipeline sort of had this cascading implication for the markets, and of course they had to pay millions of dollars to open up production again. So things just can get halted, and they say that cyber attacks on energy and commodities infrastructure account for, I think, almost the majority of major cyber incidents. There were 35 tracked in the last 5 years, and the vast majority were on sort of commodities or commodity related areas. And so and of course, when it comes to commodities, right, it's this cascading thing. It's like you're attacking the root of the tree almost, because there's so many things that come out of your operations. So it's huge, right? And so I think the takeaway is basically it should very much be a priority in these markets. One, for all the integration points as it's coming more and more online, and in order to not stall some of these very critical infrastructure pieces, that's a part that we need to pay a lot of attention to.
Thank you, Rebecca. And hopefully we will not see any attack happening Yeah, so fingers crossed.
Fingers crossed.
Heike, I think it's kind of impossible to have any discussion on commodities without throwing the ESG buzzword out there. It's difficult. So what is your view on the energy transition and the link that it has with ESG?
Okay, so I think the green transition or the energy transition and the technology transition, well, there is an absolute link with technology, digitalization, and ESG. It's linked. Traceability and ESG tracking really go hand in hand. And I think companies operating across the commodity supply chain have an enormous exposure to compliance, brand, regulatory risk of not being able to actually showcase or evidence material provenance and emissions reduction. And that's just the E component of the ESG. And then responsible sourcing of minerals is increasingly important to end users. And it's interesting how over the number of years that's changed, that started in more consumer-facing commodities, and it's gone across the whole commodity spectrum. And then lack of transparency across the entire supply chain would lead to regular risk, ESG concerns. But at the same time, they're actually very hard and expensive problems to solve for a company by itself. And it's a bit like the digital trade the comment I was making earlier. It does need a bit of an industry solution, and also requires a shared data system across the supply chain. So for example, if a end customer wants to understand where their metal comes from, that's again, many participants in their supply chain that need to provide input into that. And I think this is where metals and mining needs to give a real focus, come together as an industry, particularly around Scope 3 accounting, and an industry coming together is never easy and never particularly fast. And I think this is where also technology plays a role. Technology can address it in a way that wasn't before, track it, trace it, report it or record it as well. Before being able to reduce emissions, the industry needs to be able to measure them. So we have an ESG product vision that will enable visibility and automation. But then, ESG is broader than just the E component and measuring carbon. And I think the S&G is critical as well. So, companies that talk about being ESG consistent need to also do the right corporate actions to ensure that the governance is right. And technology probably can help less with that. Thank
you, Heike. And Petur, there's a point that you mentioned that I totally agree with. We discuss about the energy transition, forgetting that it has to be enabled by something. We need cables, we need batteries to make it happen. I personally find the expression energy transition a little bit too simplistic, if you want, because it's much wider discussion. So what roles do rare metals play in technology, and why are they so important?
Well, we could probably sit for a couple hours to discuss, or much more to discuss all the complexities of that. But I've always looked at it this way. What's very interesting when you look across the periodic table and you talk about not just the rare metals, but or the rare earth metals as they're called, which are 17 of them. It's more about the unique purpose that every single one of these metals play. You can look at, for example, a metal like rhodium, which is a metal which is found in every single one of our automotive catalysts today. That without that metal in our automotive catalysts, our combustion engines wouldn't ever reach our smog tests. If we didn't have magnets, we wouldn't rare earth magnets, we wouldn't have wind turbines. If we didn't have all the battery metals that go into energy storage, solar would have no place to collect its energy into. EVs would not be able to drive. There's 73 metals inside each one of our, and minerals inside each one of our phones. You take those out, we don't have phones. So they do enable the complete technology transition. But what the real, crux of the problem is again, coming back to my first point, the demand is insatiable, but the supply is vastly, vastly less. And even the biggest businesses, end users on the planet, and I'm talking everything from your EV companies to your battery giga companies, to your semiconductor companies, they've vastly underestimated the amount of supply there is. Most of the world thinks we're all going to be driving around in EVs 5 to 10 years from now. And that is so far from the truth that it's unbelievable sometimes that most people haven't realized that there is not enough supply, and therefore it's not just going to be the requirement for a technology shift, which is what we're talking about today, but a scientific shift which happens over the next 5, 10, and 15 years, where we're going to need to engineer out many of these technology metals to be able to keep up with the insatiable demand. So as much technology, Heike mentioned that a bit earlier, as much technology as you bring doesn't really matter if you don't have enough supply to fuel the whole ecosystem that's desiring it. So there's some other really key important points. Sure, the technology, it's going to enable all of this. We can all see each other, we can all trade, everything's fair, everything's empowered. But when we don't have enough supply, all the vast dreams don't come to reality.
With a little reality check.
A big time reality check. I mean, there's a blueprint, Alessandro, for the next 5 to 10 years for sure. Yeah, if you're in the game or an end user looking to scale up your factory, looking to supply your factory, you should have started last year, 10 years ago, but if you haven't, you better be starting right now, because it's really a first come, first served basis across the world, including all of Africa, South America, the whole world right now. It's first come, first served basis, so best get moving on finding the supply.
So from supply risk, let's move to cyber risk, Rebecca. So what would be the impact of a quantum cyber attack on the markets, on the wider financial system?
Yeah, I can definitely speak to sort of the broader impact. Specifically, we were really concerned about this. We worked with the Hudson Institute on a report last year that I would recommend checking out. And this was to sort of model how a quantum computing hack might affect the broader markets. And the problem with a quantum computing attack versus another type of ransomware or more localized attack is that the quantum computing style of attack, it breaks the infrastructure of how we protect things. So it's not just this point attack, but it's this huge what you are doing to protect yourself is now broken. And we found in that study that it could cause a just, US based, if there was an attack on one of the top 5 banks, it could cause a cascading financial failure that could lead to up to $2 trillion in losses and tie up essentially our entire system for days to weeks. And so that's, you think about that type of attack and those numbers, and that's huge. And of course, we're broadly speaking, cybersecurity is huge right now, not just in the future. So when we think about quantum computing attacks, it's not just that it's a future attack, but it's also this idea that you can store now, decrypt later. So it's estimated that China has harvested around 25% of our digital communications. While that's encrypted now, if any of that data has a shelf life, and then that data can later be decrypted and used if it's still good. So you're thinking important data like bank account information, right? So that's one thing. And then of course, more near-term impact-wise, for both the broader financial markets and commodities markets, there were several warnings issued just in the last week to banks and more broadly. Due to the Russian invasion of Ukraine and some of the restrictions that have now been posed, there's a much higher, or there's a heightened risk of sorts of attacks on critical infrastructure. So that's something that we're sort of dealing with in the ecosystem as we speak, and that's a developing situation that hopefully will not turn into a crisis.
So just probably because you threw a bomb there, yeah. You said that 25% of all data and communication has been already stored by someone and is waiting to be decrypted for later on. Yes, that's sort of the aha moment that a lot of people have is, you think in terms of data. Some data, it's good for today, right? I'm going to be here at this time. Okay, I got there this time, or things that don't have that shelf life. But if it does have a shelf life, right? Again, bank account, social security, national secrets, trade secrets for companies and organizations. So data can be and often is intercepted now. And then, again, and historically attacks have happened like this, where you finally get the processing power, the capability to break its encryption, and then you can then leak that data. So that's definitely something to watch out for. Scary movie.
Oh.
Yeah. Yeah. But there are, these next generation ways that we can start implementing today that do protect against those kinds of attacks, right? So that's the silver lining.
Let's catch up after the webinar. Yeah.
Okay, deal.
So Q&A session. Just a reminder for our friends who are listening to us if they have any questions, they can use the chat and start asking some questions. And until that happened, Heike,
there's one question.
You were mentioning collaboration earlier, and I think that as a society we're in a different place today than we were probably pre-COVID. There's much more openness around collaboration, and there are many solutions out there. Some more established than others. So, how do you work and interface with those?
Yeah, no, absolutely. So there isn't just the one solution, there is many, and there will continue to be for quite a while. And look, our approach and vision is to work on the concept of interoperability. There isn't one dominant platform emerging, not one ultimate hyperledger. So our view is we're an integrated platform, and our key vision is to tie a lot of these projects together and basically via APIs feed into the platform where specific use cases are already in existence. And in order to, keep it simple for the users, go to the one platform, but link into the others, take the barriers out and take the complexity out. So that's in a simple way, the vision.
Thank you. And I saw now that we do have our first question coming in the chat, and please have them and they're coming. I'll read it out. Can someone please categorize the different main digital technologies and their applications that are evolving in commodity trading? So who would like to take that?
I'm happy to make a start,
yeah.
But go ahead.
Go ahead. No, go ahead, Heike.
Okay. I think it's a really good question. So the way I think about it is really in 4 categories, which is a bit across the value chain. The first category is pre-trade. So it's basically technology that helps pre-trade. And what does that mean? That basically is analytics based on, AI or machine learning or, using satellite data, but basically analytics that will help you make better decisions before you're going into a trade or timing your trade. So pre-trade is one category of digital tools. The second category is what I call trade. So they're marketplaces, and that's what Peter was describing. Marketplaces, exchanges where you have access to a broader range of supply and demand, or where supply and demand meets. So second category is trade. The third category of tools I would describe as post-trade. So the execution, which is basically the supply chain solutions that help execute the trade in a more efficient, more transparent, and a more secure way. And then the last category is kind of which underpins all of it, which is what I call security. That's where Rebecca comes in. So that's my categorization. Peter and Rebecca may have a different way of explaining it.
Maybe take us, look at it from a little bit of a higher level and come to similar things. But if you look at the 3 T's being title, traceability, and transparency, you really are encompassing what the technologies are bringing. So title, the ability to own that yourself, to have the title to that raw material. Traceability, the ability to understand every single hand that it's passed from the ground to infinity in terms of ownership. And then when you have transparency, it comes back to our overriding theme. This is really what takes a lot of the power out of, puts the power into and takes a lot of the power out of being able to I suppose, hack or disrupt supply chains. When you have transparency, it's like a shadow. When you shine a light on the shadow's no longer there. You force markets to operate on an openness which then doesn't allow for as many secrets. What ends up happening is you have viewability of everything that's happening inside all supply chains.
Rebecca?
Sure. I'm a bit of an outsider when it comes to the commodities markets, but I do know that I've worked a bit in, of course, cybersecurity is huge. I also come from an AI background, and one of the fun projects that I did when I was working there was price prediction for different types of produce and that sort of thing. So using AI to sort of look at do analytics on things like environmental context and supply chain and these kinds of things. So that's my personal world on the outskirts of commodities.
Thank you. And Petur, probably coming back to you. How easy is to embrace new technology for people who already have an history in commodity trading? So how should they expect a steep learning curve?
Well, not the way at least we're doing things. When with our exchange, the metals, they trade more or less like equities. So as it comes back to what I was just saying, the title is direct. The traceability is there, and the transparency as well. So you have a fair market to start with, but then now you bring on to that easy ways to trade between one another. So in fact, we're replicating the equity markets very much as what, the way they've been traded for many, many years. At the same time, I think there's pretty much every person on this planet that has a phone by now, maybe multiple phones, and people are used to moving information between each other. And this is simply what trading ends up being. You're moving data points, you're moving price points, you're seeing it, and you're trading it together. So technology shouldn't in any way mean more complicated. In fact, the simpler the better. So for anyone that's bringing technology or trying to implement technology into their business, the simpler, the easier you make it, the better for everybody. Because sure, technology can be super confusing to everybody, right? But the trick is to make it simple. The trick is to make it easy to operate. And once you can get to that point, then the implementation, the acceptance levels rise dramatically.
Simplicity is beautiful.
You bet.
There is a question on the chat with which I totally agree with. I mean, we're talking about technology, but then regulation sometimes is several steps behind. So we are putting a lot of technology, thinking of blockchain in the specific question, but then there are several jurisdictions that are saying, okay, you might have anything you want on the chain, but where is actually, the piece of paper with the stamp and the signature? So how fast is, from your experience as well, the regulatory part following technology in commodities industry? What do you think of NFTs in the shipping documentation process? What is your view?
I'm personally not going to comment on NFTs, although I do think that the world of the Web 3.0 offers dramatic possibilities in terms of extension of liquidity. I think that's probably far more, probably more important to look at. But you're right to pose the question on regulation, and what's kind of beautiful when you balance regulation and technology, then you're able to operate. You're able to operate because regulation will stop you or technology will stop you. Now, as we started our business, we started as a spot market, so a physical trading market. So effectively, we were able to use much the same as NASDAQ did in the 1970s. We've always billed ourselves as a physical technology metals marketplace with new era tech. Now, we're using all this new era tech, but we're using it in such a way that it adapts to regulation. When you're in a spot market for metals or for any other commodity, it's not so dissimilar from going to a Sainsbury's or to a Waitrose or to any supermarket and exchanging your cash for a kilo of potatoes. So it's quite plain vanilla business. And when you don't overestimate the technology. Don't think the technology is the game changer necessarily, because it's not without the ability to implement it. So the implementation of the technology is just as key as the technology itself, which brings it right back around to your regulation question, Alessandro.
And from personal experience, talk to regulators. If you're doing something, you're planning to do anything, they will be thrilled to talking with people from the market because they lack the granularity and the knowledge of what is happening. So they always welcome views. So
even better when you don't need them, Alessandro. That gets even better, right?
It's part of life.
When you're in a spot market, it'd be the similar thing of asking Sainsbury's, back to that example, to go get regulated. So if you can implement, the point being, if you can have some new age awesome technology and you can implement that without having to get bogged down by regulatory affairs, if you can work within the confines of good business practice, of proper KYC, of proper anti-money laundering, and a host of other good practice regulations that you set yourself, effectively a self-regulatory understanding, then you're able to streamline that technology. So, regulation, regulators, all fantastic. They keep a fair playing field as well. But when you can avoid them to bootstrap and launch any business, you're much the better. Then you can take that technology you have and take it much further, much faster. It's only going to stop you if you've got to get stuck on regulation with your amazing technology.
Thank you, Peter. And probably let's close this with really technology. And Rebecca, I would like to close with you. So for the commodities companies who are considering using, or maybe are already using, blockchain technologies, is the quantum threat relevant? How should people start to think about making sure that their data is secure? And I'm still going back to that 25% percentage that you showed earlier.
Right. Yeah. I do apologize, but the quantum threat is also a threat to blockchain, and a number of the value propositions that we like to think of when we think of blockchain that are incredibly helpful in some of our, I guess, logistics, and it's this awesome technology. But of course, it also uses both public key cryptography and hash technology to power some of these value propositions. And so when it comes to a quantum hack, these are, we can use, like I was talking about, this Shor's algorithm that's very good at breaking public key cryptography, or we can use another algorithm called Grover's algorithm on a quantum computer to break something like a hash. So it is vulnerable to a quantum computing hack. I guess the good news is that a quantum computer needs to achieve something like 4,000 qubits, error-corrected qubits, and we're hovering around something like 100 non-error-corrected qubits right now. So we're a few years out. Development is going faster and faster, of course, and there's international competition, which is heating up. But yes, once we reach that scale, blockchain as we see it now is definitely vulnerable to the same type of attacks as irregular public key, RSA, etc. The good news is, though, that again we have this new class of algorithms that is being certified by NIST, which is the National Institute of Standards and Technologies. That's where a lot of our different encryption algorithms come from, or all of them. So that we can overlay and protect something like the blockchain from these types of hacks, so that it is more resilient. They call it quantum resilient. So it'll withstand current attacks as well as these attacks coming down the pipeline. And so, today, if you're just using or managing data on the blockchain that is very that doesn't have that shelf life, it's relevant today, you're probably pretty safe. However, if you're storing information that you want to keep secret for the years to come, then it's very worth it to start looking at these technologies. And what we do specifically is make this kind of technology easily accessible for something like blockchain, where you can overlay it, or for legacy systems, and sort of just making these systems compliant and compatible. So yes, I guess the scary piece is that it is vulnerable, but it's also relatively easy to start protecting these in a way that's going to withstand attacks now and for years to come.
Thank you. And actually, there is another question that it arrived into my private chat, so it's not visible for everyone. But I think it's a very interesting one, and I will ask it to Heike and Petur. Which are the 5 metals to watch, and not the 5 VGMs ones, and why?
Well, there's more than 5, but if we're going to take the top 5 and the metals which are going to have the absolute highest demand upon them.
Let me put it another way. Let me rephrase it.
Yeah.
Let's say that you have $100. Yeah. How would you split the $100 on 5 metals, and which these metals would be?
Well, you got to look. I mean, it comes down to anything. It's about breaking down why we have problems in the supply chain right now. So, I think a lot of us have heard about across the world of automotive, the inability to buy various new cars. You break that down, you're going to realize that the fundamental problems is not the supply chain as much as itself as the metals that are underneath that. I think we have to look at right now, I think we have to look at where the key here is going to be the EV industry, right? There's a lot of sectors we can focus in on, aerospace or defense, but the EV sector would probably dominate my top 4 metals. And all you have to do is look at the battery itself, the breakdown of the battery. And there we're looking at nickel, there we're looking at cobalt, there we're looking at copper, there we're looking at lithium as well. And if I go outside of the battery sector, I guess for some people it might be a controversial one, but it's actually far, far from it. It would be uranium. Now, uranium is a metal, and uranium has a huge, massive demand upon it. So again, you hear the word demand, demand, demand. Where there is demand, there will be price pull. Lithium increased by over 400% last year. Graphite about 175%. In the coming months and years, we're expecting all these metals to at least double. At least it's already happening right now. Geopolitical problems will only increase that. So with $100, I'd say put 80% into the battery metals and throw another 20% or $20 into uranium. And you should be probably sitting on about $200 by the end of next year.
So my list was similar. I had copper, lithium, nickel, and palladium, but I would say you should have invested in that last week, and because they're all kind of at a particularly high point. And then for the 5th one, I've written down tin, but then I'm also deliberating over in the short term, and if you're ethically comfortable with that, coal is quite high, but that's certainly a short-term gain, not a longer-term one. Longer term, I'll put tin on the list. But then we're not qualified to give investment advice, so don't hold us to account.
Yeah, that's a good point.
So these
This
are
is
not
just some
investment
good
advice.
friendly advice, in fact, Alessandro, some good friendly advice.
Excellent. So on that note, this brings this virtual event to a close. Let me thank you for joining the webcast and for Heike, Rebecca, and Petur for sharing their insight. Thank you, and most importantly, stay safe. Thank you.
Thanks so much. Good evening, everyone.
Thank you
Bye-bye.
so much.
Bye.
Take care.